The current use case for blockchain is scams, Ponzi's, rugs, theft. I don't trust DeFi because of exploitation and manipulation. I'm running my own Ponzi where this coin feeds that coin, which feeds that coin. Everything I mine is completely done. I mine for free. The only blockchain that those people need to be on Solana. We now see the Web3 world taking on Web2. That is the actual use case for blockchain.
What's up, guys? Welcome back to the Next Billion podcast. My name's George, and we are talking to the founders, the creators, the builders, the people that are building the really cool stuff to onboard the next billion people into crypto. And today I'm joined by Knox, aka Knox Trades on Twitter, and we're going to be talking all things Solana, really. I mean, bit of an OG in the space, got a lot of dabbling going on in a lot of different pies. So interested to talk about that. And also just in general, like from your perspective from the ecosystem. But for those viewers at home, just before we get started, this is the new setup. I have a juicy, nice new mic and a headset. There's some teething pains, but we're getting there. But hopefully the quality this time around will be good. So Knox, thank you so much for coming on the podcast today. It's a pleasure to have you.
Yeah, thanks for having me. I hope you can hear me as well, because this is also a new setup for me. This was
PC
my Christmas
building
gift
time.
to myself. Yeah, exactly. Except for me, I went in the opposite direction. I was like, you know what? I've built PCs. Now I just want a MacBook.
Yep. Okay.
So I kept it simple this time around.
Man, I was going to go down that path, and I was waiting for the new, what's the M2 Mini or something. And then it like wasn't coming. 6 months go by and I'm like, man, I just need to go and build a computer. And then as soon as I get my computer built, I see that they literally announced it yesterday.
Right. So that was kind of me. I was waiting. I ended up on Christmas Day caving in and ordered the MacBook Pro with M2. And then, 3 weeks later, they announced the M2 Pro and the M2 Max. There's a guy in GenesysGo, actually, he did wait it out and ordered his M2 Max yesterday.
Nice.
So we've been actually running benchmarks for something that we're building. We've been running benchmarks against servers that are running like 24-core AMD processors versus an M1 MacBook Pro versus an M2 MacBook Pro. And I think the benchmark that we ran for this particular piece of software on the 24-core AMD server, it ran in like 13 milliseconds, which was really fast. On the M1, it ran in 6.5 milliseconds. And on the M2, it ran in 5.7 milliseconds.
Man, they're getting so good.
I know. And now he ordered the M2 Max, and we're going to do it again and see how fast we can get it.
That's the ARM factor coming into play there, maybe,
it's phenomenal. I mean, it's honestly, the more I keep telling my friends about it, I'm like, you don't understand. Like, this is a technological marvel, these M chips. The fact that it's CPU, GPU, and neural AI processing all in one chip that can still last 24 hours a day, just insane.
Absolutely. All the more use for running various Solana stuff, which we can get into. But tell us a little bit about yourself. What's been your journey so far in crypto? How did you get to where you are? What's the TLDR?
So, I mean, it's like a Guy Ritchie movie. If you've watched Lock, Stock, and Two Smoking Barrels or Snitch, where there's like 7 stories happening at once, and they all seem completely unrelated, and then it converges in the final second. That honestly has been like my entire life, my career path, my personality. I got my degree in economics. I was really focused on finance, but my passion was in technology. You could already start to see like where the convergence of technology and finance kind of leads to blockchain and crypto, right? So exactly. So but my passion was in technology. So I graduated with econ, and I was focused on labor market economics, trying to figure out who is hiring, how much are they hiring for, and what is the barrier to entry? What skills do you need? And in 2010, 2011, it was like, oh, well, tech pays not only the highest salaries, but it also doesn't require a college degree. It really only requires like a 6-month certificate. So I was like, okay, well, I'm going to go do that.
Makes sense.
So thanks, econ degree, for telling me that like all of my choices up till that point were wrong. But I was already dabbling in like data engineering and analytics. And then it's a long story short to say that I just made it through basically every facet of tech throughout my career, and ultimately kind of made it to the top of that career and became a well-known network engineer / systems engineer / cloud architect. So Web2 life went along really fine. And then I found myself with a lot of time and freedom. And I kind of got back into this finance journey, but combined with tech, and I discovered blockchain and DeFi. So I was in blockchain in 2017 when Ethereum started like coming along. I was dabbling with mining and stuff like that. But it wasn't until DeFi came along that I got hooked.
Yeah.
And then probably because I was bored and I became became a degenerate gambler. And I 1000% fell for every single shit farm Ponzi scheme that existed on Polygon and BSC and still exists to this day. Like you saw Mark Cuban fell for that Titan.
Yeah.
I was 1000% caught up in that alongside Mark Cuban with all of that going on. Like I was there. So the way I made my way into Solana was through DeFi because NFTs didn't exist yet.
Yeah.
So I got into Solana before Solarians, before SMB, before Degen Apes, months before that stuff. And like I used Matic and Polygon and BSC for, let's say, months at that point. I used Solana for like 30 seconds and went, oh, this is better.
Yeah.
like this is like an unbiased. I went into it biased thinking Polygon's going to be better than this. And it was like 2 clicks into it. I dropped some liquidity into Radium and then took that LP token and staked it in what was then called Soul Farm, what is now called Tulip, and let it do the aggregation for me. All things that like Polygon had through Beefy Finance and Polycat and all of their things. But anyways, I did it on Solana and I was like, oh, this is better. Like this is just like I'm hooked. I'm sold.
Was it the wallets? Was it the speed? Like what was
the speed? It was the speed in the US. We didn't have Phantom yet at that point. It was Solid.
Yeah, it was early, right? It was Solid, right? And a couple of other random wallets which still exist, but
Soulflare popped up at the same time, and then Phantom came up like maybe 3 weeks after that, right?
Yep.
Like, and then that was whenever like I was like, a solid maxi at that point. I was like, no, use the one that is built for Solana. And then like everyone was like, no, try Phantom. And I was like, fine, okay, it's better. So that was it. And then, at the same time, I had started dabbling in Ethereum NFTs. I missed BAYC. I faded BAYC. I just faded it. And I was like, this is stupid. But then immediately after BAYC came the Vogue. And now we're starting talking like hipster robots. And I'm like, okay, that's me. And I'm like, I'm max minting the Vogue. And then everything that was supposed to be a BAYC killer never did.
Yeah.
Probably been 6 or 7 BAYC killers, right? I sat on the sidelines while Function at the time had like 3,000 followers and I watched him get rich.
It's the classic sort of NFTs thing, which I've fallen into, which is, no, this is kind of dumb. I'm not going to do this. And then, like next week, I regret it.
So, the IQ chart meme, I'm always the guy in the middle.
Yeah.
Like this, like it's me. Like,
I'm still that guy.
And I mean, like, I'm almost always that guy. And now I've accepted that I'm that guy. So I'm going to start listening to the people on the fringes. I've kind of relinquished throughout 2021 and 2022. I kind of came to the realization that NFTs, like outside of the really original ones or like a rare use case here or there, I'm just not going to get it. It's just not for me. I had a really long conversation with a guy named Tropics. His handle is 0xtrop. And he's someone that I like really trust for like objective advice. And he was like, look, dude, you're like really good at the tech. You're really good at ASICs. You're really good at miners. You're really good at validators. Like maybe step away from the NFTs and lean more into this side of things. Like we had this conversation in like May of last year. And at that point, like I really did like de-risk tremendously out of NFTs and focus more and more and more. That was around when I started Juicy Stake too. So I had been running RPCs for GenesysGo, and then I started Juicy Stake. So that has really been my primary focus in the ecosystem since then.
Absolutely. Well, that's a good segue into the whole sort of node ecosystem and the infrastructure. Like I think it's just become more prominent, I think, in the last 6 months with people talking about staking and nodes and Satoshi, the Nakamoto coefficient and all these sorts of things, right? And it wasn't really like that, but then it sort of took off and you had a lot of these RPC providers that are RPC as a service. And I don't know how many there are now, but there's a lot. So just a lot of people getting into that sort of thing. So essentially you're like, well, look, I have a bit of a background in this previously. Probably makes sense that I focus on this. I think Solana's kind of a go. So then what do you do next? GenesysGo, Juicy Stake, what was the trajectory there?
So GenesysGo, they had their mint and then their IDO at the very end of 2021. And that's when they announced we're going to start building out a decentralized infrastructure provider. So anyone who has technical skills who can spin up an RPC can join the GenesysGo was known for having an extraordinarily massive RPC network. They had hundreds of RPCs deployed around the world and offered it for free. Yeah. That is extraordinarily expensive of an undertaking, right? And beyond that, GenesysGo evolves and they're learning more and more about technology. They actually made some tremendous hires behind the scenes, and without revealing too much, there are some extraordinary things being worked on where now the RPC is like this tiny little piece of the pie, considering the things that GenesysGo is working on behind the scenes. A lot of that is known now with the advent of Dagger and the Shadow Cloud and things like that. How we use those, yet to be revealed. So that was the entire point of GenesysGo in the beginning, and now it's this tiny sliver of the pie. So their idea there was, okay, what we should do is we should allow other people to drop their hardware basically behind our load balance so that they can just be a part of the network. And when people pay us to use the RPCs, we'll just send all the money to them direct, like on chain. 100% goes to the operators. So me, January of 2022, 1 year ago, I was like, that sounds fascinating. I know how to run servers. I kind of made a name for myself doing that. So let me reach out to them and see how I can get in. And they had a very small select group of people that were volunteered to do it. We understood that there was a very high chance that we would not make any profit off of this for a long, long time. In fact, this month was my first profitable month running an RPC.
Congratulations.
So I ran them at a nearly total loss for a year. And they're very expensive. They're much more expensive to run than a validator node, like significantly more expensive to run than a validator. So anyways, I learned about what does it take to run infrastructure on Solana? How does Solana work through that? So fast forward to June or July, when I've kind of made this commitment to get out of NFTs and the degen side of things and focus more and more on the core infrastructure itself. My thought was like, okay, well, how do you mine Solana? Because the people in my life who like truly made it to gigawealth were Bitcoin miners and Ethereum miners. They were there early. So I'm like, okay, well, I believe in Solana. I believe Solana is the next one up. So how do I mine Solana? And the only way you do that is running a validator. And it comes out, like you find out way after the fact how much harder it is to quote unquote mine Solana and how you probably won't do it for a long time. But you find all that out after the fact. But I have the technical skills at this point to deploy a validator because I knew all the nuances and challenges with RPCs. They're almost the exact same thing, except for like literally like one command on the start script. It's no voting, actually, is what an RPC is, and voting is what a validator. So at the exact same time as that, Marinade Finance had launched what they called Marinade Gauges, where they have this gigantic pool of SOL that they spread out all across all the validators, right? So they kind of carved a sliver out of that pool, 10%, and said, hey, if you have the Marinade token, you can vote to steer SOL to your validator.
Right. This is using Tribeca, right?
Yeah, that's on the Tribeca site. They call it validator gauges is what they call it.
And for those, I guess, from Ethereum land, very similar to like Curve. And what's the thing on top of Curve? I forget. I should know this. I was there. But yeah, look, using Curve. So a vote to essentially distribute either a coin or whatever it might be. I guess in Marinade's case, what is it, like server resources or stake, I guess, between different nodes, and people vote for that? Yeah, it's stake. So 10% of their total pool is now allocated to gauges, and however much Marinade you lock up, that determines how much of that 10% you can steer to your validator. Right.
So at the time, the economics of it were like extraordinary. It was something like if you had 1,000 SOL that you swapped to Marinade, locked the Marinade, and parked it on your validator, they would stake something like, I forgot how much, like 80,000 SOL with you. It was like a massive amount. And I was like, oh, well, I can be in profit in like 30 days. Didn't work out like that. Didn't work out like that. People figured it out really, really quickly and diluted that 10% down really, really fast. And, the 80,000 that you start with soon becomes like 2,000. And you're like, well, I probably could have incurred less risk by just, staking my own SOL on myself. So anyways, like the moment I felt like I've got the technical expertise, I know that the business side and attracting stake to your validator is what's hard.
It is.
So here's the first opportunity to overcome that big hurdle, or at least that startup cost. I just like aped in at that point, and then 30 to 60 days into it, that whole thing kind of became a wash. But
how are you going about that business side of things? So I guess for those people out there, like there are how many validators? Hundreds, thousands, like there's a lot, right? So
there's 2,500 validators and like 1,500 RPCs.
Right. So how do you decide where do you stake your SOL, right? And there's a lot of people that will be shouting various things, but to really sort of make that investment worthwhile, like you need to attract some significant amount of stake so you can at least earn a commission on that stake, right? So what is the strategy there? Or I guess what's your thoughts on people that might be interested in getting into this validator staking, aka mining Sol sort of space?
So if you're thinking about starting a validator, you need to be very honest with yourself about the challenges that are coming up, because they are challenging. And I'm not saying this to dissuade anybody from doing it. I'm saying this to be honest and kind of tell you what my experience with it was. Technologically or technically, you need to have a year of working with cloud and Linux. That's really it. You don't need much. As long as you can follow instructions on a document, you can have a validator up and running. And the first time you do it, maybe 6 hours. Now, at this point, I can get a validator up and running in 20 minutes. But the first time you do it, it's a little scary and you're worried you're going to break something. You're worried you're going to break Solana. You're not. Okay, like it's not going to happen. But then once you've got that thing online, the challenge really begins, because the first thing is your validator going to vote about 4 times a second? So you could think about a vote. A vote really happens about every 400 milliseconds. But anyways, just think 4 times a second. And every time it votes, it is sending an actual transaction on the Solana blockchain, paying the Solana transaction fee. So think about doing a transaction from your wallet 4 times a second, every second of every minute of every hour, and you get the idea.
Yeah.
It literally, there is a chart that shows your account balance of how much SOL you have, and it literally just trends down. Or at least for a really long time, it literally just trends down. So you need to understand that if you're going to start your validator, you're probably going to burn through about a half a SOL a day.
Also, uptime, I think, right, is very important as well.
That is a huge part of it.
Yeah.
That's what comes down to attracting stake. So the next question becomes like, okay, well, how do I keep that balance from not going down to zero? And that's like, well, you've got to find some source of SOL to feed it. And what I did was I have ASIC miners running all over the world. I have some in Canada, a bunch in the United States, and they mine Bitcoin and they mine Litecoin, but I use a pool called pro hashing that as the funds are coming in, it swaps them on the fly. So it'll mine Bitcoin, but swap it to SOL. And then it sends that SOL to my validator. So that's how I actually kept my balance up through all this time, is I literally subsidized my validator with my ASIC mine. And, the really long story short of it is I buy ASIC miners once or twice a year, and then that becomes a tax deduction. So everything I mine is completely deducted. So I mine for free, and that supports the validator. And, that's the behind the scenes way, but that's not the goal. The goal isn't to subsidize your validator with ASIC mining. That's just what I had to do to get it
it's a bootstrapping mechanism, right? Yeah. It's like $1 here is going to be able to be worth more than $1 later. If
that's
a lot of mining, like I remember back in my mining days, I was one of the original Bitcoin miners, like 2011. I was the first batch of ASICs. I was the first batch of FPGAs. I was 1% of the network at some stage. But I remember this was when it was like $1. The price of the coin is also very intrinsically linked to the profitability of your mining operation. So for example, like if you're early days subsidizing your SOL endeavors, the early days, someone might say that doesn't make sense. But actually, if you're betting that SOL is going to outperform BTC and dollars, let's say quite significantly, then it's actually very much worth it, right? So
and that is 100% why I take my W-2 wages and buy miners with it. I subsidize that effectively with my W-2 wages, because my goal is I do not sell the coins for cash to pay for mining. I pay for the mine, like I pay the electricity bill on my credit card and then pay that bill with my W-2 salary.
Yeah.
So just like you're saying, my bet is that in a year or 2 or 3, these coins I'll be, instead of mining $100 a day, I'll be mining $2,500 a day. And that will be because I saved it.
It's essentially kind of leverage on an ASIC miner. Like I remember, looking at all of the different coins, and then you compare the profitability per megahash or gigahash or something, or terahash, I guess these days. And you can see that for the same energy output, it might be like 20% more beneficial to go and mine X thing over there. So I guess it's kind of a similar kind of thing by proxy for Solana as well. If you're saying, well, look, I'm spending this much dollars energy, whatever it is, investment to get an output, which I assume, let's say Solana goes from $20 to $40 or something, which I think is pretty reasonable in the long term. That's way more, profitable for your mining endeavors than anything that could really sort of happen with like the very razor thin margins for Bitcoin mining at the moment. So yeah.
I mean, and that's the even crazier part is now all of a sudden when I'm mining Bitcoin, swapping to Sol, now all of a sudden the Sol Bitcoin chart becomes really important.
Yeah.
Because if Bitcoin only goes down 10% and Sol goes down 40%, now I'm actually mining more Sol per day.
Yeah.
Because now my Bitcoin that I mine buys more Sol. So, I mean, there for a while, I mean, I was mining, I forgot, it was like 5 Sol a day. Like, that doesn't sound like much, but a year ago, that was $1,250.
Yeah. Yeah, absolutely.
Like so now I'm looking back on it and I'm like, okay, well, now I'm going to take that 5 Sol, I'm going to stake it on Juicy Stake and turn it into 5.5 Sol and make even more. So basically I'm running my own Ponzi where this coin feeds that coin, which feeds that coin.
It's like physical composability.
It really is cross-chain.
Well, maybe that's a good point as well. So this bet on the Solana ecosystem, what do you think, why are you betting so much on the Solana ecosystem? What are the elements which you think it has, which other L1s? Like a lot of people, you came from Matic and Polygon worlds, and we've all used MetaMask, I think, in the past as well, at least many of us. By the way, it's the worst wallet ever, don't use it. But why is the Solana ecosystem something that maybe has some potential? And I think with your infrastructure work, like you clearly see that, but there's also DeFi stuff, there's NFT things. Like, is this what's really going to drive the growth for, well, hey, the name of the podcast is the next billion, right? Is that how we're going to get the next billion people? I mean, I see a lot of dog coins that are worth billions of dollars. I see like ghost chains that are worth billions of dollars. It's like, this thing has a lot of actual stuff going on. Surely it's a good bet.
I mean, so for me, like I have to look a little introspectively for a second and realize like, okay, I'm a user of blockchain. I'm a user of crypto. Am I a typical user of these products, or am I a typical person? And the answer is no. Like I've had a strong affinity for technology and finance my entire life. So the question then becomes like, okay, well, which blockchain would be able to onboard a typical person? So I tested it out with my mom, which, a lot of people know her on Twitter as narrates, right? And then I tested it out with my dad, who's like basically Jamie Dimon and thinks crypto is a scam.
Okay.
And even him, I got him to recognize like the actual potential that Solana brought. Apple is the richest company in the world for a reason. And it's because all of its products are simple. Like they're not even colorful. Everything is white and gray. Like they're just simple. My grandmother has an iPad and an iPhone. She knows how to use, a phone to send text messages and look at images and browse the web. And what you need to onboard masses is simplicity. It's not like, it's not going to make you a millionaire or whatever. So it's a great way to raise capital, but it's not the great way to reach people. The great way to reach people is literally to copy and paste what Apple did, and that's just be easy to use. And
that is the comparison that's given a lot with Solana. Is it's like the Apple of crypto. Like taking Phantom, for example, when that came along as a wallet, that was so much better of a user experience than anything that MetaMask is still at now. And it just felt very Apple-like. The transitions were smooth, the animations were smooth. It was just nice.
And everybody's copying it now too.
Yeah.
I mean, like look at Aptos. Every single wallet is just a clone of Phantom.
Yeah.
I mean, it's basically all the same builders too. But honestly, like, my mom, got into the Solana ecosystem. She learned about NFTs, and like what naturally happens, something pulled her over to the Ethereum side for a brief moment. And she tried to use Ethereum. She tried to use MetaMask. She tried to understand gas, and she's like, "It's fucking horrible." So, and I'm like, I know that's why the bets are all on Solana. Is if you're an app builder, your goal should be able to provide the smoothest user experience for your users. If anything at all about your product, if anything all about your app creates friction for the users, they're done. They're out. They're not coming back. The end. It has to be smooth, seamless, easy upfront.
Absolutely.
Ethereum, Polygon, BSC, AVAX, all of these other chains do not give you, at least not to the scale that Solana did. As hard as it is to let it go, like the only real blockchain that I thought was truly competitive at the time was Luna, Terra, like whatever, like I used that blockchain and I was like, this is smooth. I like the wallet.
So did I.
Like,
the wallet was easy to use. Yeah.
I really like Terra for all it was for. Now it's dead. So
it was good though. Like it did have a smooth wallet. I remember they had the tokenized stocks there and they had yield funds. It was like Microsoft at 250% APY. I was in that bad boy for a bit and the experience was smooth. And I think that's what attracted a lot of people to it as well. Like, yes, the 18% Ponzi or whatever, but also it's clear that people actually want smooth running chains that do things that are actually useful. And if I have to learn about, the gas fees and, oh no, I selected a wrong gas fee by like 3 Gwei and now it's going to take an extra 20 minutes. I've already lost interest by that point, right? Yeah. So it does have to be a smooth user experience. So it seems like, that's something that you're really betting on, Solana being that smooth user experience. And I mean, a lot of chains will say this. They'll be like, hey, I'm really fast, man. There's 1,000 blockchains out there that say that they're fast and they got all of this all cool stuff. So what is it that makes Solana stand out, perhaps?
So one of the biggest things that stands out that people take for granted majorly is finality. When is a transaction final on the blockchain? If you try and send coins from your wallet to Coinbase, they're not going to show up in Coinbase until it's finalized, right? So that means for Bitcoin, it's going to be an hour and a half. For Ethereum, it's going to be 30 minutes or so. For Polygon, it's going to be 30 minutes. Confirmation happens right away on all of them, but finality doesn't happen for half an hour to an hour or more on every single one of these blockchains. Solana, about 12 seconds.
Yep.
Like, it's just there. I mean, it does exactly what it advertises that it's supposed to do. Instantaneous, nearly free transactions. And as far as an end user goes, any application now that takes money, this is where people I think are also falling short, is the current use case for blockchain in general. The current use case for blockchain in general, primarily, as much as we hate to admit it, or maybe we're not admitting it at all, is scams, Ponzi's, rugs, theft. Like the majority of money flowing throughout blockchains are typically bad transactions. And that's what comes with the territory of being anonymous and decentralized. It's just, I mean,
casinos are a good business.
I mean, casinos are making me a lot of money right now. So, I mean, it's just one of those things that's what comes with the territory, and that's how the rest of the world sees it. What has to happen to stop that is for a Web2 company to say, okay, we're a Web2 company, this is our product, and this is how we handle payments right now. All we have to do is add a new form of payment, and that's through the blockchain. So now we're going to take Uber or DoorDash or Airbnb or any of these Web2 companies that make extraordinary amounts of money. All they have to do is integrate with a blockchain so that now payments can be handled without clearinghouses. Like now I can pay my Uber driver instantaneously via the Solana blockchain. And the driver's not going to hate it. The payer's not going to hate it. And the company's not going to hate it because the transaction happens immediately. All of a sudden, we now see the Web3 world taking on Web2 by leveraging a better payment system. And to me, that is the actual use case for blockchain. Take it one step further. If I travel internationally to Australia, Thailand, UK, Saudi Arabia, wherever, if I can have a common currency, a common app to pay for the common service everywhere, now all of a sudden borderless currencies are the entire reason we're here. And the transmission and sale of goods and services instantaneously, borderlessly, the transfer of wealth becomes truly efficient. And that's the argument for blockchain. Up until Solana, blockchain wasn't able to accomplish that because we need instantaneous confirmation. That's what the Web2 finance world did. Even if it was going to take 24 hours to clear or settle, you still got instantaneous confirmation. And with blockchain, Bitcoin and Ethereum, there was this risk of could they still cancel the transaction because it's going to take an hour and a half to clear anyways. I could pay somebody and then cancel the transaction. With Solana, it's just not a thing. And now Solana actually has provided the mechanism for these Web2 companies to integrate.
Yeah.
So now it just becomes a matter of go do it.
Yeah, look, it's about people building things that people want. And I'm glad you said that because it's been about a private money for the world. That's what I say. That's what it's always been. That's when, 12 years ago when I first got into Bitcoin, that's what it was about. That's what a couple of nerds on the internet started, was that, you know what? banks kind of suck. Like, has anyone actually tried to do a wire transfer? It's the most hideous, horrible process. I've literally just lost money before where the bank's like, yeah, I don't know what happened. And they're like, oh, I went through an intermediary and then another intermediary and then something. And oh, okay. Like, and they literally don't know what's happening. Whereas if I can pay someone just with an address and it's like, here's the address. It sounds simple and it sounds kind of ridiculous. Like, oh yeah, we heard that before, man. Like, welcome to a decade ago. It's like, yeah, but we're not there yet. But ultimately, like, it is so much better of a user experience that you can actually have private money for the world, and you don't have to rely on a bunch of guys that sit around a table and make up, what they think the money should be today, which I think is an amazing thing. And people can just choose, whatever they like more is the thing which will get traction, and that's what people will settle on. So I guess as well, like in the DeFi space with Solana, I think you do a bit of stuff with Camino as well, is that right? And what do you sort of see in the DeFi space? Because Bitcoin started this, like it was a transactional thing originally. Then it became like gold and it's a store of value. But really, I think the important thing that DeFi is trying to do is build a financial system. And a financial system is actually larger than the $8 trillion market cap of gold. It's hundreds of trillions of dollars, right? So what DeFi is trying to achieve is a financial system. So do you think with getting there, are we on the right track? We had a big spike in DeFi maybe 2 years ago, and now things are sort of settling down. Are all of the apps there that we need? Are there more things that should be built yet that haven't? What's your take on the DeFi landscape?
Man, I don't know. I mean, because I've always been a DeFi skeptic ever since I got burned pretty bad on the Matic side of things. And I wish I knew what to say, because what you find out with DeFi is that DeFi is so prone to hacks and security risks or exploitation, because maybe it wasn't hacked, but the application itself was written in such a way that it wasn't hard to overtake it, so to speak, and manipulate the market. You see that with Avi Eisenberg. I can't remember his last name. I mean, like, he was a really well-known character in the space, but my God, this has happened. He's not the first and he's not the last. All you have to do is go to web3isgoinggreat.com. And it's literally a timeline, step by step, every single DeFi hack that's going on. And it's like, you realize it doesn't stop. Like, it just goes back for years. And there's been hundreds of billions of dollars that have now been lost. So I don't typically trust DeFi because of exploitation and manipulation. That being said, there are certain pieces of DeFi that I'm just comfortable enough to get working with. I don't like things like impermanent loss. I like peg strategies or stable strategies because I've been burned by those too. I've been burned by impermanent loss. It only takes getting burned by impermanent loss one time.
And then it becomes permanent.
Yeah, exactly. And then with stable strategies, even then, I'm super skeptical because we all thought UST was going to be rock solid. If you had your money in USDC, UST, you lost it all, even if you were in a stable strategy. So at this point, I am dabbling with like liquid state Sol LPs like MSol, GitoSol, or MSol Sol, or stable strategies with coins that I trust, like USDC, USDT. And at that point, I'm still at this very moment scratching my head going, why am I doing this again? Because now my savings account makes more money than this LP. So I don't know. I don't touch leverage at all. Never have, never will. Don't touch lending. I just did the Degen stuff, and I'm not going to do the Degen stuff anymore. I would rather just have assets on chain that are not going apeshit.
Yeah, I think that's some wise words. It's about simplicity as well, right? So yes, I think we saw an explosion of all of these DeFi things, but there's not really that many. Like, I think at Step, we in the last 6 months, we probably removed maybe 3 or 4 different integrations that don't exist anymore or bloating up the code base. So yeah, these things come and go. I think the things which stick around though, like fundamentally, a DEX, I think, is an important thing. Yep. So the ability to swap one asset to another, it's not going to Binance.com and trusting their database and then some guy sitting there one night and then FTX, hey, here's a good example, right? So like if you're just trading one coin to another, it should be all automated. It should be on chain. And I think like
1000%.
Yeah.
Yeah, totally agree. I do not keep a single penny on a centralized exchange, not one penny.
Yep.
What I do, so I have a Coinbase One subscription, so I have no fees with Coinbase. And then you can buy on debit card in the United States, which automatically allows you to withdraw it to the chain. So you don't have to wait for clearing of like 5 days. So then on top of that, when you buy USDC on Coinbase, they match it 1-to-1. There's no spot. So what I do is I buy, make up a number, 1,000 USDC for $1,000, no fee. I immediately withdraw it on chain and then swap it to Sol at a DEX.
Yep, makes
better
sense.
Spot rate too. So
that's where I think centralized exchanges will probably be, is they'll be like this on and off ramps. Like you won't go there to trade, because we've seen with FTX very clearly recently that, okay, surely there's a better way to do this whole trading thing. Can we do it in a decentralized way? And even things like Uniswap is an exchange and it's been around for many years and it still works. It still does its thing. Like I think Orca on Solana does a great job. Can just swap one thing to another. It's simple to understand. I think that's clearly a use case which makes sense, which people want. And
I'm a big fan, as far as DeFi goes, I'm a big fan of Orca and I'm a big fan of Solana, which is built on top of the new open book. If I'm doing swaps or placing orders, that's where I'm going. I'm either going to go to Orca/Jupiter or Solana to actually place orders. And if I'm participating in DeFi and liquidity providing, I'm exclusively going to Orca through Kamina. That's the only, and that is literally the only place that I'm touching DeFi. For the most part, with my liquidity, I am happiest just staking it, because my belief is in Sol. The Sol token is what I expect to outperform everything else that I hold. I would like to take my Sol and turn it into more Sol. So like well, that is the core of my portfolio.
There's the thesis there on what do they call it? Fat protocol thesis or whatever they say, where it's the value of an ecosystem accrues to the L1, or does it accrue to the apps on it? And I think regardless, let's say Solana is successful in doing all of these other things, whether it's NFTs or payments or DeFi or whatever. Well, I mean, they're all using the underlying blockchain, right? That should be your base case for, assessing things against each other. That's why I think the best way to assess coins is against their base layer. So all Sol coins should be assessed against Sol. All Ethereum coins should be assessed against Ethereum. And I think that just makes way more sense than introducing some third-party random coin called USD or whatever it might be. Like if you're not outperforming the base layer, then what are you doing? And if you are outperforming the base layer, well, that's really interesting information. That what's happening here that is making
what are you doing?
It's like what's going on here, that it's like outperforming the average essentially of all things. I kind of look at Sol as like an index. It's kind of like an average of all things. But yeah, okay. So was 2021 the year of NFTs, or was 2022 the year of NFTs?
I would have said 2020. That was the year NFTs really took off. 2022 was a lot of degeneracy while the number just went down constantly.
True. What's 2023 then? Your predictions for the coming year, things to look forward to, I guess, in the Solana ecosystem. What's going on?
Okay, so here's what I think is going to happen. I think the fallout of everything from 2022 culminated, in November/December. The actual Pico bottom was like December 29th.
Yep.
When we hit $8. I think because of the amount of PTSD everybody has at this point in the Solana ecosystem, everybody who's been in the Solana ecosystem, we all still believe in Solana. I think a lot of people are kind of like me, whereas towards the latter half of the year, they started really de-risking, but they never stopped believing in Sol. So that's why you are seeing more people talk about nodes, validators, securing the network. How do we just keep Sol alive and blockchain alive in general? I think that's why. I think everybody now has had an opportunity to sell off maybe that NFT that wasn't quite what they thought it was going to be, or bail out of that meme coin that wasn't quite what they thought it was going to be. Now they have a nice pile of Sol, and they just want to protect that Sol, because Sol will likely do multiples in the next bull market if you believe what I believe. So I think 2023 is going to be an extension of that. I really believe in the Bitcoin rainbow chart. I really do. I really believe in the power of the halving cycle. A halving happens in 2024. That sets up a 6-month kind of warm-up period, which is then followed by a 9 to 12 month like euphoric explosion period. which would probably spill into 2025. So I think 2023, I hope people see things kind of like how I see it. I think 2023 is going to be a fine year. It wouldn't surprise me if Sol went up a little or just maybe stayed in this range, the $30 to $15 range. I don't know. But I think people are just going to accumulate Sol and sit on their hands, hopefully stake it, maybe put some in DeFi or liquid stake it, and hopefully not degen and lose money too much because of what could happen in 2024 and 2020. So what I think that means ultimately, Solana, I would expect to see the Nakamoto coefficient go up. I would expect to see stake distributed, especially with the advent of new stake pools. And I would expect to see DeFi start to move up again, finally, as people now have excess liquidity, don't want to park it in illiquid assets, so they'll put it in lending or liquidity pools. That's what I think will happen. That's what I hope will happen. That is what I am doing.
Yeah, I think there's a lot of parallels there to what you said to like 2019, we could say. 2018 was giga bear market, everything wrecked, number go down. I think the last 6 months kind of speed run a lot of a 2018 sort of cycle where, there's just like gradual sort of bear market for a couple of years. 2019 was a year of building. A lot of things emerged for the first time. Nobody really knew what they were. But then we had a period of a couple of years after that, which really took off. And hey, maybe we're heading to a similar kind of trajectory at the moment. But I think Solana now has a lot of that. To create something from nothing is very hard. And that's what Solana did. It was just another blockchain, right? But now it has so much critical mass. I think it's like 10 wallets or something. And all of those wallets have anywhere from tens of thousands to millions of users. Then you've got all of these different DeFi protocols, got the NFTs, huge, if not the biggest of any chain. So I think it's got a lot of, headwinds, which are good to build upon for the new year. So there we go. So I guess that's some hopeful predictions, but I think quite grounded as well. We did really just get giga-wrecked in the last year and that sort of thing. So, but everyone's still here. Everyone's still building. Everyone's still doing awesome stuff.
And that's all I need to know to park my money here is the fact that nobody actually left. The real builders are still here. Not only have they not stopped building, the things that they're building are actually getting more impressive. And, I use that Uber as an example of paying your driver. That's actually being built on Solana right now. It's called a Trip, the rideshare protocol.
Yeah, they had a thing, I think, at Lisbon. I don't know if you were there at Breakpoint, but I think they were giving out things and there were like trips that you could take, like with the Solana Uber in Lisbon. That was cool.
Yeah, and that's kind of my point. Is like those things are actually happening. Those things are in development. Nobody is talking about it, even though maybe they should. If that was something that I could freaking seed invest in, I throw everything. Anyway, like that's the stuff that really gets me jacked up is now a true Web 2 versus Web 3 competition, because I haven't really seen anything like that yet, except for maybe in the gaming industry, maybe. So that's the part where I think, okay, this is where mass adoption actually happens, is you take something that the average user is already familiar with, because they're not familiar with DeFi, they're not familiar with blockchain, they're not familiar with NFTs, but they do know Uber.
Yep.
If you tell them here's something else that is actually better, it's international Uber, you'll probably like this better. And I think that's how it happens. I also think it happens on college campuses, because I was there when the Facebook launched in 2004, thefacebook.com. And all it took was getting 18-year-olds and 19-year-olds like into your ecosystem that created the actual Web 2 revolution. Social media was Web 2. It was now connecting people to other people as well as information. So I think the true advent of Web 3 should happen in the same way. Right now, what blockchains are doing incorrectly is they're going to college campuses and then sitting down in the computer science classes and trying to onboard developers. Fine, of course, you need apps in order to have users. What they're not doing is they're not setting up a shop in the union or the quad with, their phones in their hands and trying to onboard the fraternity, the sorority people. Like they're not trying to onboard the football team. Those are the people you need to go at. The people who have influence on the college campus, that's what's going to get people into your ecosystem. Hell, go after the gamers and show them, hey, if you play this game for a few hours a day, you'll earn this token, swap it to USDC, and then you can go buy your Chick-fil-A.
I'm surprised that's not more of a widely known thing. Like, I don't get it that gamers don't understand that, hey, right now you're paying money to EA and Blizzard and Activision and all of these horrible people, or you could make money and you could still play the game. So it's like, what are you doing? Like, why don't gamers get this? I don't understand. It's a weird
why don't
disconnect.
game companies understand that you could build a marketplace for your in-game assets and get paid a fee for every swap that could say, like, you'd make more money there than loot crates that your skins.
I saw a good panel like a year or two ago from the Axie guy, like when Axie was the biggest thing ever. And he was saying that people like Epic Games or whatever, the Unreal Engine people, they have a lot of assets and IP. And the way that they come at crypto is, oh, we're going to tokenize our IP, but it's still going to be our IP. And you have to pay us some rental fee to go and use it. But then you have the crypto people that are like, no, the people will make the IP and the assets. And what the Axie guy was saying was that the better, more scalable business model is where everyone can just go and build anything that they want. And there's no sort of restrictions on them of you can only use this type of IP for this tree or whatever it might be in game assets, whatever. So I kind of agree that makes sense. Maybe it's a boomer perspective to be like, oh, everyone's going to sign legal agreements and use our IP and that's how we're going to make money. It's like, I think the Web3 world is going to be very spontaneous.
Yeah, very much focused on the creator economy.
Yeah,
and
absolutely.
Let people create it and sell their own shit in the game, but you still collect a fee because it's your marketplace or something. I don't know. I mean, to me, I just think the people who are running blockchains are extraordinarily smart at one thing. And what they need to do is recognize we're not smart at the other thing. And we really do need adoption. So the people who know how to market to 22-year-old non-tech people, let them go do that, because right now we're not doing that at all.
Yep.
And I think that's where adoption comes in. Yeah, everybody's a little jealous about Matic buying major brands. Maybe that'll get in front of these young people and they'll see Nike and whoever has Starbucks, but I don't think that's going to do the trick.
Yeah, like look, McDonald's has an NFT collection. I think Nike or Adidas has done an NFT collection, but nobody cares about it. People care about the apes and whatever it might be.
Yep.
They care about the spontaneous things, which a bunch of degens create, and that's more fun. Like nobody's hanging out in the McDonald's Discord. So like I think the strategy that maybe some other chains of just like buying ad space and a brand to like do something with, it just doesn't work. It's
not going to.
It's the wrong perspective. Work. Yeah.
It's the exact same way that Facebook didn't do any of that shit in its early days. It did organic on-campus growth. And importantly, that was the first time where people were given an empty wall where they could create their own content. And that's what drove, 19-year-old boys to follow 19-year-old girls and vice versa, is now they're talking about things that they're legitimately interested in, and they formed their own connections in network through Facebook. That was how social media came to be. You curate your own feed in social media for the most part. You choose who you follow, and that was the organic thing. Web3 should be like that. You choose who you interact with and who you do transactions with, not these brands who are trying to pump advertising down your throat.
Absolutely.
And that's why I have thought so many times, just a tiny booth out front of the union and just be in people's face. Hey, you want to check out Solana blockchain? You want to make some money? Like, I guarantee you would onboard 20 or 30 people a campus you go to, and they tell their friend, one of them tells their 3 friends, and so on. And that's how it happens. And at some point, that college campus demographic becomes the mainstream. Those become the users who now this is a part of their life. I don't know. I have this very strong belief that that's how blockchain should be marketed. And the only blockchain that is worth using for these people who aren't technology enthusiasts, who don't understand why it takes 30 minutes, like those people need to be on Solana.
Absolutely.
And that's my story, and I'm sticking to it.
Absolutely. I think that's a good way to end off as well. Where can people find more about you, Knox? You're on Twitter, websites, or where should people go to follow you and check things out like Juicy Steak?
Yeah, so Juicy Steak is juicystake.io. Basic website, spun it up pretty quickly just to have a nice little website where people can see that I'm a real official person. Twitter is @Knox_trades. The DMs are open. You can DM me, especially if you're thinking about starting a validator. We never actually answered the question, how do you attract stake? So
I think it's all of the above. It's all of these things that it's adoption.
So to be honest, I run at 0% commission to attract stake, with the hope that eventually I'll be able to attract enough stake that I can switch to a commission-based fee. And I assume I'm going to lose some of the stake when that happens, but hopefully people like me enough to want to support me and keep going after that point. point. And then remind them every time I see them, if somebody says staking on the internet, I'm kicking in the door and I'm in your face and I'm telling you why you need to stake with Juicy Stake. So yeah, I mean, for me, it's just been relentless marketing and aggressive on the commission side of things because my costs were being subsidized by the ASIC mining, so I could take on that cost. Anyways, if you have questions about that, DM, that's the long way to put it. There is also a Discord server. I really only use that Discord server to post maintenance announcements. So like if Juicy Stake is going down for maintenance, like it did today, I'll post it there and let people know when it's done. Twitter is definitely the best way to get me. I am on Telegram, but I don't really use it. You know, I hang out in GenesysGo because I work there and do some cool things with them. So yeah.
Absolutely. Well, everyone go and check out Knox. He's a great asset to the whole ecosystem of Solana. A really nice guy, as I'm sure you can tell through this discussion. An OG as well. And yeah, look, I'm excited to see some of your predictions come to fruition this year. I tend to agree with all of that. So go check it out. Thank you so much for coming on the podcast today and have a great rest of the day.
Thanks, guys.
Cheers.